Welcome to this WindowTrader presentation, 13 Ways Traders Use Market Profile Software. Before starting, please read our disclosure statement, which basically states that this presentation is for informational purposes only and we make no guarantees as to the results you'll achieve using the market profile or the ideas shared in this presentation. My name is Doug, and as the head of Subscriber Support Services, I'm your moderator for this presentation. I started trading and using the market profile in 2003 and have been a WindowTrader team member since 2009. Today's presentation is about software, market profile software to be specific. We're not here to tell you which way to trade, but to show you features and functionalities unique to market profile software and several different ways traders are productively using market profile in their trading. We offer this presentation not to promote our own software, but to provide you with information so you can decide which features and functionality can best support you in your trading. So let's get started. The market profile supports traders in interpreting market information and identifying past, current, and developing market structure that is usually less visible on bar and candlestick charts. This first display shows a traditional market profile chart based on a single session. The profile on the left, number 1, is a collapsed profile, and the one on the right, number 2, is an expanded profile for the same session. For those unfamiliar with an expanded profile, refer to your experience with a bar chart. Here we see a 30-minute bar chart, number 1, next to an expanded market profile chart, number 2, both showing 30-minute periods. To construct a profile, we simply take those 30-minute period columns and compress them horizontally to the left margin to create the traditional market profile display. The market profile is a trading support tool. It organizes and displays market information in a format that enhances interpretation of the market's auction process and supports the identification of key areas of acceptance, which are areas favorable to market activity, and rejection, which are areas unfavorable to extended market activity. In market profile terminology, we're talking about buying and selling tails or excess, value areas, which are the fairest price where trade is facilitated, and balance. To see inter-timeframe relationships, here we have day session profiles with the overnight sessions displayed in summary bars. Those are the number 1s. This type of display helps traders see how the night session traded in relation to the previous day session, which are the number 2s, and identify potential clues as to the next day's session type, including the most probable type of opening that might occur. The market profile also helps to quickly and accurately identify areas of higher and lower than average volume, knowing that high volume areas frequently act as magnets attracting the market to those areas. Conversely, low volume areas are frequently viewed as areas of rejection. These are, many times, areas where the market will pause before it makes its decision about whether to continue in its current direction or to change directions. Another value of recognizing volume displays is that they often support the trader in making his or her decision at a key reference point or key decision zone. Most market profile software provides traders with number 1, session volume, number 2, current period volume, number 3, colors to highlight different volume levels, and number 4, multiple period volume data for contracts and in some cases bid and ask information at each price level. Identifying the possible end of one distribution and the beginning of another can be accomplished by using the split profile feature available in most market profile software. For example, here are 3 different configurations of the same session. Number 1 is an expanded profile showing an upper and lower trading zone. Number 2 is a collapsed profile showing clearly the single F prints, which represent excess or rejection, and 3A and 3B show a profile divided into 2 distinct distributions at the single F prints, with the upper and lower distributions treated as separate sessions. Next, many traders use the merge profile function in market profile software. They do this to see where the heaviest concentration of volume occurred and to determine zones reflecting both acceptance and a rejection for a specific period of time. As you can see on this chart with the merge profile based on 7 sessions, the most significant area of acceptance, the red rows designating high volume and the green row showing the merge profile's point of control, became a key reference zone for especially the following 2 sessions. On a longer-term scale, traders use a cumulative profile to identify long-term acceptance and rejection. For example, this chart shows a cumulative profile based on the previous 90 days. The number of days on display is the individual trader's preference. Like the merge profile, many traders use the cumulative profile high and low volume areas as key reference zones in identifying probable areas of acceptance and/or rejection. Most traders who use the market profile look at TPOs to determine the value area and point of control, shown here with number 1. Conversely, there are a lot of traders who configure their profiles using contract volume as the basis for determining the value area and point of control, seen in number 2 here. The following chart is based on the same 3 profiles but in an expanded configuration to show you how both views have merit. This chart shows, number 1, the TPO-based profile, and number 2, the contract-based profile. We show this to illustrate how both displays could have potentially supported an experienced market profile trader in preparing scenarios for number 3, the upcoming session. The TPO-based profile shows the point of control in roughly the middle of the session's range, while the contract-based profile shows the point of control close to the session's low. By noting the location of both points of control, the trader could have noted that more volume on a contract count basis was near the lows of the session, and if volume was biased to the short side, could potentially result in the next session opening lower and continuing its downside momentum as one potential. And as we can see in number 3 here, after opening lower and then basically balancing, the TPO point of control would most likely have been a key reference point to the upside, which is what happened in this example. Market profile helps identify, classify, and interpret different session shapes or structure because each profile communicates a different message about what's happening in the current market. Also, each of these different session types offers clues to the upcoming, probable, and potential market activity. There are 6 or 7 different types of days or sessions ranging from a normal day to a neutral day and a non-trend day to a multi-distribution trend day. To learn more about the different day types, look into the many publications available on the market profile or check out the informative offerings available from educators focusing on the market profile. At the end of this presentation, I'll show you where you can find listings and links to these and many more resources. Next, the market profile helps traders identify and interpret different patterns, such as short covering, which is shown here in number 1, and long liquidation, shown here in number 2. Again, each of these patterns offers clues to upcoming probable and potential market activity. As I mentioned before, to learn more about different shapes and patterns, check out the array of educational offerings available on the market profile on our website and elsewhere. Another way that traders use market profile software is to classify the opening of a session in relation to the previous session's value area. This is a possible indication of the directional move of the current developing session. For example, profile number 1 shows an opening inside a value which frequently tends to favor both higher and lower prices. Profile number 2 shows an opening above value but within the previous session's range. This tends to favor higher prices. And profile number 3 shows an opening below value and outside of range, which tends to forewarn lower prices. Another critical benefit of market profile is to determine key reference points, or as we have labeled them, key decision zones. For those of you with a technical analysis background, key reference points or decision zones many times include support and resistance levels. On the other hand, support and resistance levels do not always address key reference points or decision zones, which are based on many factors including time, shape, structure, and patterns that can be displayed on a market profile chart. For example, shaded area A on the high of profile number 2 would be typically noted as a resistance level. On this market profile chart, we mark the top 3 ticks as a key reference area or zone because it's a selling tail or excess and denotes what we call a good high. Next, shaded area B is based on the 2 points of control on profiles number 1 and number 2. If this area or zone had been highlighted after the close of session number 2, it's likely that many market profile traders would have paid attention to it as a possible target in their preparatory scenarios for the next session, number 3. That's assuming the market opened lower and failed to take out the key reference points in shaded area C, then started trading to the upside. Here we can glean more information than meets the eye with just bar or candlestick charts. For example, the value areas and points of control on profiles 1, 2, 3, and 4 are becoming closer together as each session unfolds. Second, the decreasing range of the selling tails or excess on profiles 1, 2, and 3 communicate the possibility of an exhausting upward auction, while simultaneously and conversely, the poor high on profile number 4 tells us there is a potential for a continuing up move. Third, profile number 4 is a double distribution profile with the close on the session low. Note that the single print separating the two distributions is also excess, and a key reference point or zone plus profile number 4 left what's called, in market profile terminology, a spike, and therefore is subject to the spike rules. Next, profile number 5 opened one tick outside of the previous day's range, attempted to go higher and failed at the key reference point, which is the single print between the distributions on profile number 4, then it traded down and settled near the session low. Finally, to gain insight and perspective, this chart shows you how, by using the different profile configurations on a single monitor, it's possible to view multiple time frames from both a contextual and a detailed perspective. For example, number 1 is a merge profile used to identify intermediate term acceptance and rejection. Number 2 is a split profile to identify the start of a new distribution. Number 3 shows an expanded profile to monitor individual period activity. With number 4, we have a collapse profile to monitor shape and structure. Number 5 is an overnight profile to identify overnight activity and the potential opening zone for the next session. 6 shows a collapse profile with session volume. 7 is a cumulative profile to evaluate longer-term acceptance and rejection. And last but not least, number 8 is a key reference point or zone reflecting the high volume area in the upper quadrant of the merge profile, plus the highs of sessions number 2 and number 3. Remember, the market profile is not a trading system. It doesn't give buy, sell, entry, exit, overbought, or oversold indicators. The trader makes trading decisions based on an independent evaluation of market price and value information. Traders, through study and experience, can learn to identify the market's underlying dynamics and structure, for example, trending versus trading range, and then initiate, manage, and exit trades accordingly. As we end this presentation, we want to acknowledge the Chicago Board of Trade, which is a part of the CME Group, Pete Stottlemyre, Jim Dalton, Dan Gramza, and Futures Trader 71 for their contributions to helping all of us appreciate, learn, and use the market profile in our trading. For a listing and links to all the market profile sources that we're aware of, visit our website at www.windotrader.com, and under Market Profile on the navigation bar you will see 3 submenus. One for Market Profile publications, which includes books, articles, and white papers. Another for Market Profile educators, where we list names and provide links to their websites. And finally, a listing of all the Market Profile software providers with links to their respective websites. We have done our best to make these lists complete, but acknowledge we may have missed someone or something. So as you go through these lists, if you notice something missing, please contact us with appropriate information and we'll correct it. If you'd like a copy of an impartial checklist to help you choose the Market Profile software application that's right for you and your trading, go to our website, and there, under the Market Profile tab, click on Market Profile Software for the link to the Market Profile Software checklist. In closing, I want to thank you for setting the time aside to view this presentation and wish you continued and unlimited success in your trading.